It looks like we're live. Hello, everyone. Good morning, good afternoon, good evening, wherever you may be. So we're back in the study. It's been finished. There's still a bit of work being done around the house, but yeah. So it's Rudy. Rudy's back, as you can see. So there's the title today is a massive paradigm shift is underway from financialization to hard assets. So Clive is going to be coming on as well. He should be on in about 5 to 10 minutes, and we'll cover that and we'll take as many questions as possible from you because it's getting harder and harder to navigate through the comment section. It's one thing I wanted to say. Yeah, there's a lot of bots and spam right now. I tried to delete them all. I've spoken to, well, I've contacted my account manager at YouTube, but not much has been done so far. So quite a few of you already. So there's Rudy, where he's back on the sofa. So we've got Olivier Leroy, Andrew Arama, Hayo Silver, David Jackson from Greece. Oh, great. Silver Truther, Andrew Bevan. Hi, Andrew. Justin Taylor says, evening, Mario and Rudy. Darren Smith, Elias El Khoury from Saudi Arabia or KSA, Ricois from rainy Montreal. Well, today here it rained overnight from Saturday to Sunday, but the weather was okay. I played golf this morning and I cut the grass as well this afternoon, so it was quite busy. Rob Windridge from Warwickshire, nice to see you, Rob. Brett Green, Luke. What was remodeled? Well, you can see it was repainted. We also got a new floor, and new doors as well. We needed new doors. So yeah, and we're changing some of the doors around the house as well. So it's quite a lot of work. Michael Kennedy, Darren Smith, Robbie Bobcat. And also, if you remember, on this side, there used to be wallpaper, green wallpaper. It's now all gold color, which is convenient. You also got new lights. There's a chandelier now. It doesn't hang as much, the light. So yeah, quite a few things. Biker Spill, yeah, I'm doing well, thank you. And you? Sandy Anderson from Denmark. Long Beach Joe Jets. Thank you. Christina Tax from Sweden. I don't like your surname. I'm joking. Tax, Christina Tax. Just joking anyway. Chris Conman. Hi, Chris. Justin Taylor. Good to see Rudy back where he belongs. Yeah. Well, I've got an announcement to make about Rudy. One of the viewers has developed the Rudy collection, and it should be coming out soon. So it's mugs, t-shirts, cushions, hats with the Monaco 64 brand and Rudy on it. Some of you have asked about merchandise. I used to do merchandise on Teespring, but the quality there was so bad that I stopped. And I'm going to be sent some samples, and I think it's going to be fine. And we're going to start marketing the not Billy, the Rudy collection. Grant Harding from Western Australia, Perth. Susie from uh, Territory Canada Inc. Dilwyn Roberts from North Wales over here. Any opinion about the Uganda gold? It's It's just pie in the sky over here. Yes, someone just it's just like how can I say? It's the data there has to be a lot of drilling and a lot of money spent to find out exactly how much gold there is there. This is just pure speculation. It's a little bit like the gold that was made out of lead or something in the Hadron Collider in CERN. That was infinitesimal gold that lasted for nanoseconds. This is all just rubbish, and so is the Uganda story. That's what I think of it. Brigitte Zandanelli. Hi to Rudy and Mario from Switzerland. Great. We're coming to Switzerland in July. We're going to spend a bit of time there with the family. Yeah, Mark, with a K. Yeah, the dollar is been devalued, and so are other currencies. And most people don't realize it because they don't look at their currencies versus gold. They don't look at the dollar versus gold, but that's where the devaluation is coming. And good point. Nashville Pastaman. Good morning, Mario. Good morning, Nashville Pastaman. Michael Kennedy, markets closed tomorrow. Yeah, it will be a bit quieter tomorrow. US and UK London and New York are closed. Silver Truther, I think the LBMA and COMEX are becoming more and more irrelevant. So yeah, I'm not surprised. And Durarama, does Basel actually mean anything? EU just pushed back. Yeah, I mean, Basel III, they are proposals from the Bank for International Settlements. It doesn't mean that the banks around the world have to adopt it, and they just kick the can down the road. So that's what's happened. William Blair, do you think Jim Sinclair's mine Tanzania royalty? Yeah, I mean, I have owned that in the past, but I don't anymore. The reason I bought it was because of Jim Sinclair. I remember I bought it a long time ago. It went to like $7. I don't know where it is now. I'm not really, I haven't looked at it. And the thing is, now that he's gone, I'm not sure. Yeah, I'd be interested in it, but I could be wrong. Dylan Roberts says the West is irrelevant. Well, I wouldn't say it's irrelevant, but it's becoming less relevant. I think the rest of the world is really catching up. And unfortunately, uh, I think the majority of people and leaders in the West are kind of in denial about that. uh, changes changes coming. How can gold go to 4,000 when manufacturing costs are around 1,900? Well, because gold is more than just a commodity, it's a monetary commodity. And the reason why the price goes up so much is because the more debt and fiat currency is created, the more valuable gold becomes because you can't produce gold out of thin air. The name dollar, the name pound sterling, all the currencies used to be gold. The paper currencies that we have today, they derive their value from gold. So that's how you can have that changes coming. Elias El Khoury, Meyer, did you notice that a gold backwardation has started on Friday? Um, no, I didn't notice that. I mean, backwardation is usually when the spot price is higher than the futures price. it's really easy, really sorry, difficult to keep track of it because, yeah, I mean the prices are. It's difficult to get the exact prices live. You might see the closing of the spot futures contract, which is not very heavily traded, at a higher price than the where the market is trading, like the futures, and then people will say, "Oh, it's in backwardation." But there are some people like the late Professor Fichetti who said that once gold goes into permanent backwardation, that's the end of the fiat currency regime. So I haven't noticed it, but I'll look into it. Sat Stacker from Vancouver, William Blair. I just bought for the same reason. So much respect for Jim Sinclair. Bill Holter's heavily involved. Well, I'll have a look at it. I'm open-minded. So Clive is here. Just gonna admit him onto the live stream. Blue Water Stacks. Thank you for your super chat. Hi, Clive.
Good evening, Mario.
How are you?
I'm well. What's the topic tonight?
Well, I've been answering a lot of questions, but the title is A Massive Paradigm Shift is Underway from Financialization to to Hard Assets. So basically, my view is that, more and more uh, money or funds are going to move from traditional stocks and bonds to commodities and gold. And I think you agree with me, or if you don't, it's fine. But I wanted
Yeah,
to,
no, I agree. I think that what it will take is a little bit of a stall in the stock market, which we can't say we've definitely got, but there are signs that it's starting. And if the market continues to stall, i.e., not making new highs, and that's where we have been for a while now,
Hmm.
then I think they'll move to other things which are making new highs, and gold, of course, is one of those.
Yeah, we got a super chat from Blue Water Stacks. Thank you, Blue Water Stacks. It says US local coin shops overwhelmed with metals, everyone selling. It's sad watching people sell stacks to round up fiat to pay for inflation. Yeah, I mean, it's a hard. I interviewed a few years ago. What's his name again? Star Path Academy. He's got a good YouTube channel. He grew up in Romania in the 90s. And he said during high inflation, the hardest thing is to keep hold of your gold and silver because a lot of times you need to like sell them to survive. So that's the other thing about gold and silver. It's hard to keep it. Wouldn't you say so, Clive?
Yeah, I mean, actually, on Saturday, I went into my local gold and silver shop, the one I tend to buy things from, to see what they'd got. Literally, they had, I would say, maybe 45, 50 silver coins maximum, real maximum. And they showed me everything they got. And it was like a stack of 20 Australian coins, which I already had some, and then a stack of US coins. And I think there was one other, which I forget what it was. But that was it. They were out of stock. So I'm surprised that elsewhere in America, the coins are coming in the door because literally this shop had nothing coming in the door.
Yeah. William PMCD, please, any comment how media entertainment is affected after paradigm shift? Thank you. Uh, well, I think this paradigm shift is has a lot to do with the bond market because from 1981 to 2020, we had a bull market in bonds, so people could borrow as much as they wanted. They could refinance a lot lower as rates went down, and money was easy. Media, entertainment, there's loads of it. So I think when it reverses, it's going to not only affect media and entertainment, but everything. It's going to be more of a sober world. It's not going to be as easy. That's the way I see it. What about you, Clive?
Well, for much of the later part of my career, portfolios were benefiting from the fact that interest rates had been heading down from north of 10% in UK, for example, I think in America too, gradually towards zero. So that meant that if you had this traditional 60-40% portfolio, you had your gains on the equity side, but you also had a gain on the bond side. But I think now that's gone. Interest rates have moved up from 1% and they're heading, what, we're to 4.5%, even 5% on the 30-year bond. And what that does mean is those who are holding either direct bonds or if they're holding bond funds, they're now today staring at losses, and people must be rethinking whether they want to continue to hold these.
Yeah, Ounces, thank you for your super chat. And before I read his comment, just wanted to say you got if you are a stacker, you should check out Ounce's app. I think it's on Apple, the Apple iOS, you call it. I'm not sure if it's on Android. It's a great way to keep track of how much your stack is worth in fiat. He says, "Hello, Mario and Clive. The shift is absolutely happening. Gold is slowly but steadily coming into the financial mainstream. Exciting times ahead." Yeah, and Clive, you mentioned that if you had the 60-40 portfolio, you did well. But now I'm hearing I saw a story, a headline that Nippon Life, I think probably the biggest life insurer in Japan, they announced that they're sitting on a load of losses because they hold a lot of JGBs, and the yields in Japan have been going up. And do you remember a few months ago, China, the regulators there said that insurance companies could invest up to 1% in gold. So I wouldn't be surprised if the same thing happens in Japan, and it could even spread to the West.
Yeah, I mean, obviously the Japanese interest rates have risen a lot, which means very large losses for the holders of Japanese bonds, and this has happened in the recent week or two. So it wouldn't surprise me if some large institution, maybe in Japan, is sitting on a portfolio where they again have to come out and say, "Look, we've lost a shitload of money, and we're really sorry about that, but." Uh, Now we've got to take some emergency measures or even go into bankruptcy. So this is a possibility. It seems to happen every time there's a major shift in the price of anything. There always seems to be someone sitting at the wrong end of it. And whilst we haven't got any major news yet, I think that Nippon story may be the beginning of others coming out and saying the same thing with bigger losses.
Yeah, so here's the headline from Gold Telegraph. Japan's biggest life insurer says unrealized losses. Yeah, these unrealized losses, they are also piling up in the US banking system. And the other, I saw this chart on LinkedIn actually. I kind of nicked it from someone else, but this is the 10-year yield from, 1981 till 2020, and it's really broken the downward trend. And this person here, and I agree with this person, thinks we could go close to like well above 8% by before 2030, and that's possible. The technicals look pretty bullish, which is a bad thing, of course. But Clive, do you think the Fed and other central banks will allow this to happen? Do you think they're gonna do QE or yield curve control, and what would the effect be of that?
Well, there will be at some point uh, a point of a moment when the government and the Federal Reserve between them agree that we can't allow interest rates to go beyond a certain level. And when I say interest rate, I mean the yield on certain government bonds. Now, I imagine that the one they're looking at most is the 10-year bond. But of course, the 30-year bond is already in extreme territory with a yield of over 5%. And it looks like that's going to go higher. The 10-year bond, which is about 4.5%, well, that's heading towards 5%. And I think last time it got up to 5%, it then came off that level. But if it goes beyond 5%, I've got a feeling that's kind of the level at which action will be taken. What that means is the Federal Reserve is invited or instructed or ordered, depending on which way you look at it, to buy treasuries so that the yields don't go any higher. In other words, they're supporting the prices. By supporting the prices, they stop the price from falling because, as you know, if a bond price falls, the yield goes up. So by supporting the prices, they stop of treasuries, they stop the price from falling, therefore stopping the yield from rising, which kind of helps the government as they borrow more and more money to borrow at least at the slightly lower rates than they would otherwise have to pay. The worry, of course, is if the Federal Reserve doesn't do that, yields spiral out of control, and suddenly the government's paying 6, 7, God knows what percentage. And obviously, you saw on that chart, yields could easily go to 8 plus or 10, and that
Yeah.
would be a disaster.
Yeah, that would be, excuse me. Over here says Mario, 4th of July will be the next 3-day holiday in the US. How high are the risks for a bank holiday then? Well, sorry about that. A bank holiday, I mean, the last one in the US was in 1933. And that was because a lot of banks were going under and people wanted their money and there's no gold anymore in the banks. Uh, yeah, I mean, I'm not too sure whether there will be a bank holiday in the sense that they'll close the banks for a week because the banks right now they seem to be okay, but you never know. Uh, or maybe you're thinking of a reset or something. I'm not sure. Right now, things seem to be pretty much under control, but things could change quickly. Clive?
Well, exactly your last words said it all. You know, when we get a currency reset of some sort, it could come with zero warning. One day there's an event somewhere in the world, somebody says the wrong thing, something happens, and the whole world starts to panic. And it could. My suspicion is it will come out of Japan as a first instance. So perhaps there's a panic in Japan, maybe let's say a major bankruptcy. Suddenly there's a run on the currency. Suddenly they close the doors in Japan, and then guess what? The UK says, God, we might be next. Well, not the UK, but the population says we might be next, and everyone starts rushing down to their bank. So the banks in the
Hmm.
UK close, Europe closes, and by the time we get to Friday, it's spread, and you know how these things do spread. You find American banks closing, and then it's announced over the weekend that we're going to keep the banks closed for 2 weeks till things settle down. And while they're in this 2 week period, they have another emergency contract conference between the central banks, Bretton Woods style, and hammer out a new system, perhaps linked to a gold-backed currency. Except the amount of money you'll be allowed to change into the gold-backed currency will be very limited, perhaps only
Yeah.
£5,000 or £20,000, or I don't know what it will be. And those who've got more than that will be stuck with a worthless currency.
Yeah, and also July 6th and 7th this year, they have the BRICS summit, and there's been rumors that, or speculation, there'll be a Rio reset. It's going to be held in Rio, Brazil. Matt Peterson says, Meditations, question mark. Do you mean the book, the Marcus Aurelius Meditations? I recommend it. I have that. I bought it a few months ago. It's a good book. Have you heard of it, Clive?
No, I don't know that book.
It's about, yeah, he's the philosopher emperor. It's about stoicism and it's like a manual. I recommend it. It's pretty good. Nashville Pasta Man, thank you for your super chat. CRE loss reduced tax revenues, property taxes up, commercial real estate. Oh yeah, I mean it's a big problem, commercial real estate. I agree. William PMCD asks Clive, is it accurate that most of the AAA rated nations have been subsidized by the USA over the last 50 years? Thank you. Well, AAA nations, well, there's Germany, the Scandinavian countries, Australia, Canada. I'm not sure what you mean by them being subsidized by the USA. There's a lot. The idea now is that it's the US that's been ripped off. for 50 years because they're running deficits. I think it's the other way around, and I have nothing against Americans, but I just observe America's had this exorbitant privilege of borrowing money out of thin air and buying things with paper for over 50 years, while the rest of the world has to earn their money. So, yeah, I'm not so sure whether
Well, Mary, let me put it this way. If I came to you and said, can you sell me some gold at half price? And you sell me your gold at half price, which is what the accusation against the rest of the world is by America or by Mr. Trump. Is it you who've ripped me off by taking my money, or is it me who's ripped you off by taking your goods at half price?
Yeah, I know. Did he say that? Yeah, I know.
I mean,
Um,
the accusation is the rest of the world has been ripping America off by selling goods to America too cheaply, causing all this trade
yeah,
deficit.
yeah, I
But of
know.
course, what's the world done with all this money? Well, they put it into U.S. Treasury, so the government's
Yeah.
got it back anyway through the back door.
I mean, William, I'm not trying to be rude, but the rest of the world has also subsidized the heavy deficit spending, the heavy borrowing, because the rest of the world they've run surpluses and they've reinvested. They've lent the money back to the U.S. At very low rates, right?
That's right.
Yeah. Someone's asking what came of Trump's crypto generational legacy. I don't know. I don't really follow that too closely. Have you been following that, Clive? And it seems like you've got two camps in the Trump family. Eric Trump, who is pro crypto, and Don Jr., who's pro gold. So maybe they're hedging their bets.
We've had a lot of silence from Mr. Trump on the crypto front recently. I mean, at the time of the election, he was all for it, but now we've got silence, and I don't think there's a lot going on really. So,
Hmm.
yeah, I've got nothing to say. There's no news, I'd say.
Yeah, and I saw though that what Besant, the Treasury Secretary, said that stable coins would help finance the Treasury, that trillions would be pumped into stable coins and then into treasuries. But I don't buy that. It's a little bit like because what's going to be behind, basically he's saying treasuries are going to be supported by stable coins, but there's nothing behind stable coins. Stable coins just created out of thin air, and they're supposed to be backed by US dollars that are created out of thin air. So I don't get it.
Oh, I do. The way I see it is this. Let's say I want to buy Bitcoin. First of all, I have to buy um, USDT, Tether, basically. When I buy Tether, that means Tether has now got my money because they've got to issue new Tether. So they have to do something with that money. And if, assuming they do it legitimately, they have to buy US treasuries or they have to put on deposit. So when I buy Tether, to all intents and purposes, I'm buying a token which then takes that money and puts it into US treasuries. I can now use that token to go off and buy Bitcoin or some rubbish coin or whatever I want to do. But at the end of the day, as I put money into the crypto space, that is money which I'm effectively unwittingly lending to the US government. Of course, as I then go and buy something, somebody else is taking the tether because they're selling to me what they think is overpriced, and they're taking the tether to sit it out, well, to go back into Bitcoin or whatever. But at the end of the day, as money flows into Bitcoin, I'm saying that generically because it could be anything like that, it has to pass via Tether. And as it passes via Tether, that basically means Tether has to buy treasuries. So it is good for the government in a certain sense.
Yeah, I
And the
know. I
more money
agree
which
with
goes
you.
in, the better it is for the government.
I agree with you, but I'm not sure I would want to put my money into Tether. But anyway, uh, over here says, I think it's in relationship to, I said the last time there was a bank holiday or the market shut was 1933. Says there was some type of market interruption after 9/11. You're right. They closed the market for a week, I think. But that was not to do with a bank holiday. It was to do with the events of 9/11. But I agree. You remember that well, I guess, Clive, as I remember
Yeah.
it.
I mean, I guess the market was only, I can't remember now the closure of the market at all. I guess it did happen. It must have happened, of course. But I don't recollect it being closed in the rest of the world. I think it was, if it was very just a local American thing. I mean, obviously a very serious incident
Yeah,
and yeah, terrible incident, but
yeah,
they closed the market. I mean, the big one was when they closed the market in January. I think it was January, it might have been February 1933, that which was about a month or two before they called in the gold. After they reopened the the banks, the stock market, which had also closed at the same period, had its biggest one-day leap in all of history. It's never been beaten since. I think it was about 13% up on the day they reopened the market,
yeah,
and then continued upwards for another few months, and actually ended up something like 100%. Now, obviously, this was in the middle of the Great Depression, so 100% rise in the stock market didn't take it anywhere near the previous lofty heights before the stock market crash of 1929. And, even after that 100% rise, it then turned on its heels and started heading back down again. But there was a lot of money, given that people kind of sensed they weren't going to be allowed to buy gold and they couldn't get out of the banks because the banks
yeah.
had run out now. They were trying to buy something to preserve the value of their wealth.
Yeah, Golden Sun, thank you for your super chat. Hello from A2 Michigan. Yeah, and I heard Ray Dalio. He did a little clip of when Nixon closed the gold window. He said he was already working. He was a clerk or clerk at a Wall Street firm, and he heard that over the weekend that the U.S. basically had defaulted, and he thought the stock market was going to crash. But he actually said that in the next few months, the stock market went up 25%. And I think it's similar to what you said there in 1933, after they reopened the market, they went up. And I think it's because, yeah, the things were bad before, and then they just took extraordinary measures, and the liquidity came back, and there was confidence. So the same thing could happen, for example, if they do a reset of the gold price. And let's say over a weekend, they say we're going to close the markets for a week. And then they announce during that week gold is going to be repriced to 10,000. When the market reopens, you will see like a massive rise, I think, if they do that.
I agree.
Mm,
And I think obviously gold will do very well if it's underpinned by a reset in the price.
yeah.
Because let's say they reset it to today's value, you then know to all intents and purposes where your bottom line is.
Yeah.
So it's got to go higher.
Ounces, thank you for your super chat. Is got a question. Has a reserve currency ever lacked AAA rating? I don't think so. Uh, I'm not. I would. I'm not sure. Did they have ratings like in the 1950s when the or 1940s when the pound was still the major reserve currency? Not sure.
I mean, Britain was the reserve currency way back when,
Yeah.
but I doubt they had any rating agencies back
Yeah.
then.
But back also the reserve currencies usually it was they usually were under a gold standard, so it was as good as gold. But
Mhm.
you're right, ounces. I don't think it bodes well for the dollars. It'll still be a reserve currency, but I think it will be one of many actually. And I think the major reserve asset though is going to be gold again, Clive.
Hmm.
Yeah. Because if you look at the Fed's balance sheet when it started out over 100 years ago, over 90% of it was gold, and so were other central banks, because that was money. And I think that's changing now. Chris Conman, thank you for your super chat. Question from Chris: what are the chances the U.S. government increases taxes on the sale of gold and silver after the dollar system implodes? Thank you. Do you mean capital gains tax or like sales tax? What do you think, Clive?
Well, if the dollar system implodes, the implication is that we have a replacement currency. the new dollar, the gold dollar, the CBDC, something like that. So, and the old currency then gets left behind. Now, if the old currency is left behind, it means that all the obligations in the old currency, such as US treasuries, are now in a defunct currency and are no longer a liability of the United States. At least they are a liability, but they can print their way to infinity if they want, because nobody's allowed to spend them. So, at that, in such a situation, the government doesn't need as much revenue to balance its budget, because we mustn't forget a lot of what the government has to do at the moment is repay existing debt and pay the interest on the existing debt. And that's so they have to borrow more and more. But in the situation that the dollar implodes and they've got a new replacement currency, they'll be starting from a debt to GDP ratio of effectively zero with no interest on it at all on day one. I mean, it will
Yeah.
get worse over time. So, do they really need to raise taxes? At that point, I would say that's an opportunity to reduce taxes.
Yeah, Carmen Shivas says, Clive, will you still be talking money as you take your last breath? Question mark. What's important to greedy Muppets? That's not very nice. Well, why do we talk about money? Why do I talk about money? Is it because I'm greedy? No, because money is the most important mechanism in the modern, economy that we have. It's been around for thousands of years. Without money, you couldn't have specialization. You couldn't have, yeah, you couldn't have trade, and we'd still be living in caves, Carmen. And no, and the reason we talk about gold and silver is because the current monetary system has been so corrupted that we think a lot of people who have worked hard actually and saved their money for a rainy day, they could end up holding the bag. And that's why we talk about it, not because we're greedy. I don't know what you think, Clive, about that comment.
Well, first of all, just at a personal level, I got a lot of people asking for information and advice. I'm giving it out free. I don't charge anybody. I've got no service, no newsletter to sell or anything. So I'm doing everything for free. But one of the things which why we talk about money is everybody almost would like money. That's why people go to work. It's like why people do things. So this is why social media is full of people who are collecting money from their YouTube videos or anything else.
Yeah,
Everybody would like to get some money from somewhere, and the fact is, it's valuable to people. Therefore,
yeah,
people want to know what to do with it. And I think you and I are providing a service to those who want to know what to do in terms of talking about how they can protect the money that they've received. So I think there's a great deal of interest, and it's a service to the population
yeah.
to talk about it. And yes, maybe we'll still be talking about it on the day we die, but it doesn't mean to say that we're coveting money and trying to get more of it right up until the last second.
No, but Carmen's right about one thing. She says money should be worth weight in gold. Electronic money has no value. Well, I agree. And the Austrians actually, when von Mises, he described money as the most marketable commodity. So that's what it is. And historically has been gold and silver. It could be anything, Carmen. In Germany after World War II, cigarettes became like the most marketable commodity because the currency was destroyed, and the American GIs had cigarettes with them, and that became a bit of a, yeah, you know that story, Clive.
Yeah. Do you remember the story about the island of Yap?
Oh yeah,
YAP?
the stone money, they're rounds. Yeah.
That's right. They had these giant stones weighing several tons, representing wealth or money, and the ownership of although the stones themselves could never move because they're just too heavy, the ownership of the stones would change from one family to another depending on the economic circumstances, and everybody knew who owned which stone or how what percentage of each stone everybody owned. And then one day there was an enterprising Brit who discovered that these stones, which had originally come from a distant island, that he could sail his ship to this distant island, bring the stones back to the island of Yap and trade them for something, I don't know, barley or grain or whatever they sold on the island of Yap. And then, of course, the stones effectively lost all their value because there was too many stones,
There
just
you
like the
go.
currency of today.
Yeah, money.
And we're looking at the stones, aren't they? This picture,
Yeah.
the stones of Yap.
Yeah, this was money. Yeah, there you go. Let's see if we got any more questions. Michael Wolseley says Dr. Stephen Leap says all crypto are vulnerable to quantum computers. That's true. I've had Dr. Lieb on about a month or two ago. He's very nice. He's a nice guy. Uh, Dave Bellamy says, Carmen, money enables division of labor when it's honest. Yeah, Carmen also said, Clive, that we should stop dealing with the bankers. Well, I try to deal as little as possible with the bankers. I try to keep as little savings as possible in the bank. Yes, I do have positions in the stock market, but that's not huge. But I don't have any debt, so that's the way I do it. And I'm not buying government bonds either.
I mean, I think from a practical point of view, you've got to keep uh, your day-to-day spending needs in the bank because how else do you pay your bills? Of course, certain tradesmen and things will take cash, but if you go to the supermarket or many places, they're kind of expecting you to use your credit card. And there are places which don't take cash at all anymore. So, realistically speaking, you've got to keep some cash in the bank to pay your bills. There might be unexpected things which happen, like your electric, well, not unexpected, your electricity bill. You can't walk down to the electricity company with a bundle of cash very easily. So, you've got to have some, and the amount will vary according to your own circumstances. If you have a very risky and precarious job, then you probably need to keep more. And if you have a very safe job, and maybe if there's two or three people bringing in income to the household, you need less and less.
Yeah.
But what you don't need to do, what you shouldn't do, is have long-term savings in your bank account unless you're willing to accept that it will buy over the years, even after the interest you earned and the tax you paid, it'll buy less and less. Uh, some people say, well, that's a valid trade, an acceptable trade-off for me because I don't mind losing my buying power in return for not taking any risks. Because the minute you buy anything, whether it be gold, silver, Bitcoin, stocks, houses, the price can change rapidly, and you might, inverted commas, and I say that with big inverted commas, lose money. At least you've got the perception you've lost money because the price has changed in money terms. But long-term saving in a bank means you're going to go backwards financially. The only grounds on which that's acceptable is if you are willing to do it as a trade-off for the risk reduction, i.e., you can sleep better at night like that. And there's a lot of people who think like that. They say, I don't understand the stock market. I don't understand investments. I
Yeah.
want to sleep at night, and that's why I hold cash in the bank. Of course, you can hold it under your pillow too, but there's a security risk if you have too much of it.
Yeah. Clive, there's a super chat here. Thank you, Golden Sun. Can you speak about software volatility? So software is the replacement for US dollar LIBOR, and it's a US based reference price for, I think it's overnight or borrowing amongst the big banks. I haven't followed this market, but I would say if there is volatility in the software market, it means that the bankers don't trust each other, or because it's like where Wall Street comes, it's the plumbing of Wall Street. That's what LIBOR used to be. Have you got any opinion on that, Clive? Have you been?
I haven't watched SOFA, but I will talk about the old LIBOR rates at the time of the financial crisis. Uh, Historically, LIBOR rates for every bank, more or less, was almost the same. There might be a 16th of a percent, an eighth of a percent difference from one bank to the next. But they basically all had the same LIBOR rate, whether it be dollars or pounds or whatever. And then along came the financial crisis, and we suddenly found that the rates from one bank to the next bank were very, very different. Of course, LIBOR is an amalgamation of all the rates of all the banks. But when you look at the rate which one bank will pay or lend at, those rates varied greatly because not one bank trusted the next bank.
Yeah.
So the rates were all over the place.
So yeah, that's what I think. That if you start seeing a lot of volatility in the software market, that's a bad sign about the banking sector. So yeah, maybe it's we should keep an eye on it, but right now I haven't heard anything about that. Everything leads back to the crown, City of London. Well, actually, Clive, I've got a really good book here I've started reading again. It's called The Empire of the City: The Secret History of British Financial Power.
Hmm.
And the
Secret,
author,
eh?
yeah, E.C. Knut. He was an American. I think he was born in 1890, and he fought in World War One, and then he was unhappy uh, about the reasons that they told him he went to war, and he's done a lot of research, and this is one of the books. So I'll just read the back here. So it says the author presents a behind the scenes look at the secretive international policies of the British government and how their past success allowed them to rise to the top of a vast secret order of world finance. According to the author, he has pieced enough information together presented in his book, which clearly shows that a colossal financial and political organization is run from an area of London called the City, the square mile. Due to its power, the city is claimed to operate as a super government of the world and is said to play some kind of role or have influence in virtually every major world event. This book was written in the 40s, but anyway, this book provides a bird's eye view of British international finance. And there is a good documentary on YouTube about the empire, like Britain's second empire, financial empire. But Clive, I think it's waning now, especially with what's going on in the LBMA, because there's the old saying, isn't there, Clive? He who has the gold makes the rules. And it looks like the LBMA has like a 60-day delay to deliver gold.
Yeah. Um, so, yeah, someone we know, Mario, that someone is acquiring all this gold. By the deliveries which are coming out of New York. Every month this year they've been at least 200% higher than the same month a year before. This month in May, it's more than 700% higher than a year before. So someone wants that gold, and I guess whoever wants that gold wants to make the rules, but we don't know who it is yet.
No, no. Uh, Someone's saying here that the city is the banker for the Vatican. Could be, but I don't know if the Vatican is doing that well financially. But who knows? Can a person get a true tinfoil hat to absorb radiation? No, I don't. That's an interesting question. Uh, Someone said China. I think China has a lot of gold. What do you think, Clive?
We've had two occasions in the past where, over the last decade, where China has come out and said, "By the way, we haven't been updating you on our gold purchases, and here's we've bought over the last 6 years without telling anybody." So they've done it in the past. I accumulated a lot of gold, and then the World Gold Council's put the number up of 6 years purchase in one go because they first found out about it. So it wouldn't surprise me one little bit that it's happening again. But there's no any evidence that I've seen of that, but I've seen a lot of anecdotal evidence where people are saying there's a lot of gold being exported to China, but I can't, you can't know whether that's going into private individual hands or the government's hand. But it wouldn't surprise me that they got a lot more gold than they say they have.
Clive, did you hear that the EU is delaying the implementation of Basel III? Do you have a
Yep.
opinion on that? I think you said that on Friday, wasn't it? So that Basel III is not just about the gold, but also about bank regulation. And I think if they delay it, that means that the banks can keep doing riskier things, right?
Yeah, I don't know if they're delaying the whole thing, but the bit they're delaying is to do with the trading books. And basically, banks are buying and selling currencies and derivatives and options and God knows what else. And of course, the more you have as exposed positions, the more reserves you need to keep at the central bank. So under the Basel III regulations, the proposal was that banks would have to have a lot more, or would have to have more reserves than were required in the past against their trading book, and that would make the banks a safer place to park your money. But America has effectively not implemented Basel III, and Europe has decided so that they don't want to give the American banks an advantage. They've decided to delay the implementation of that particular rule, and maybe that's the whole of Basel III, I don't know, until 2027. Perhaps waiting to see if the Americans decide to implement it as well. But so that's the point. It would give, in theory, a head start to the American banks, if they could have less reserves than the European banks, because if the European banks had to have those reserves, it would be a cost. And there's a cost, you pass it on to the customers.
Yeah, HMAN says at Monaco 64, you used to own Bitcoin, yeah, but not anymore. That's right. Some say the NSA created it, but to what end? Yeah, no, I've heard that before, and I've heard it from someone who worked for the regulator in the UK back in the early 2000s, and he told me they were talking about Bitcoin in 2003, and then the SEC came and said you need to keep quiet about it. So why would the NSA and I think it was also DARPA was involved. Why would they want to create Bitcoin? Well, the reason I was given by this guy who I can't really say his name, but is that it was used as a way of laundering like money that was basically, we've seen with Doge how much corruption and how much money is siphoned off in the US. And I think that's what it was used for. And then after the '08 crisis, they thought, oh, why don't we use this Bitcoin to try to get people to stay away from buying, gold and silver as well. I think that's what it is, personally. Clive, have you got any opinion?
Well, first of all, if anyone definitively knows who Satoshi Nakamoto really was, they risk finding themselves floating down a river face down. So I think it'd be unwise for anyone to outright say, I know it personally. But I think if you played the game of Cluedo as a child, you could probably make some educated guesses as to whether it's one person and who it might be, or whether it's a group of people and who they are. So let's just say there's a lot of clues out there. They don't all point in exactly the same direction. So there's more than one candidate, or let's say there's more than one candidates, because I
Mm.
suspect it was perhaps more of a group effort. Although the wallets, which are lying unused with many, many billions in them, I suspect those wallets do belong to one person.
Yeah.
But that doesn't mean to say that that one person, Satoshi Nakamoto, wasn't behind him, more than
Yeah.
one person, all developing the same code.
Yeah, someone has said that Satoshi Nakamoto in Japanese means like central intelligence or something. I don't know, but anyway, Ounces, thank you for your super chat. Will this delay of Basel III in the EU lead to regulatory arbitrage if the Americans still go ahead with Basel III as planned? Well, I guess I'm not sure. I guess you're saying American banks could uh, go to open European offices and not have to like follow US rules. I don't know how that works. I think if you're an American bank, even if you are in Europe, you're supposed to follow American rules. I don't know, Clive.
Yeah.
What do
I
you
mean, the whole reason why Europe has delayed it is to avoid regulatory arbitrage. Otherwise, if you're a bank on one side of the Atlantic and you could have a subsidiary on the other side of the Atlantic, what's going to happen? You're just going to move your that bit of your business, the trading business, to the place where it's cheapest, and the cheapest place is the place which requires you to have the least reserves. So yes, there would have been regulatory arbitrage, but now that Europe's delayed, there won't be any.
Yeah, because the US hasn't implemented it either, has it?
No, no,
Yeah,
they haven't. And I don't think we've got a date. I mean, a lot of people said they'd implement it on the 1st of
July.
July, but
Yeah.
I've not seen any
No.
concrete evidence of that. I don't know that's true. I mean, I don't know where that comes from.
If anything, I think the U.S. Treasury and Besant, they're trying to loosen regulation. I think they're going to get rid of the SLR, which is the statutory leverage ratio for banks, which means they'll be able to buy more and more treasuries. And I think they're desperate for that, Clive, because foreigners are not really too interested anymore in treasuries.
And they got to. They got this huge borrowing requirement coming up the moment they raise the debt ceiling, which should be in July or August.
Yeah,
Otherwise, they go bust.
yeah.
Um, and you'll have to raise 1 trillion very quickly at that time. Where's it going to come from?
Yeah. Uh, Chris Conlon, thank you for your super chat. If the US Treasury rolls out new fiat currency backed by gold at 40%, would the Fed be able to pursue QE policies in times of crisis? Um, well, I'll I don't think there would be as many crises actually if the US money supply or the debt was 40% backed by gold. Um, but they probably would. They could make the exception though if there was a crisis. What's your view, Clive?
Well, it's a yes and no answer. If the currency has to be backed by 40% gold, it means that the Fed would have to hold 40% in gold for every so if they issue $100, they've got to have 40% in gold. So they can't issue any new dollars unless they get gold in the door. But of course, the magic trick for that is to go into the market and buy gold, assume you could buy it at the official gold price, which won't be possible because the gold price would be high. But let's say you go into the market and you buy gold, and then you can immediately issue. So you bought $40 of gold, you could immediately issue $100 of notes. So yeah, that would be QE, but the first problem they've got to do is get their hands on gold at the official gold price, and who's going to
Yeah.
sell it to them at the official gold price when it can't go any lower than that?
Yeah, if the dollar is also pegged by gold, if they start doing what Clive said too much, that it will drive the gold price, and then there will be a problem. But the reason why I said maybe there wouldn't be a crisis is because, from 1929 up until, I don't know, 2008, there weren't that many huge financial crises. It's only been in the last 30 years that you've had a lot. So I think it would be good for the system if it was 40% back. There would be a lot less volatility. Oh, there's Rudy. He's just gone back on the sofa. He was on the floor. Pigo's Trading Desk, thank you for your super chat. Crypto has existed since the 80s. He says DigiCash. Uh, yeah, I'm not sure. What do you say, Clive? Has it been around since the 80s?
Well, ever since the beginning of time, I mean, we're probably going back before that. I say beginning of time, I mean, certainly for the last, long before Bitcoin, there are armies and armies of people trying to create a digital currency, like DigiCash, which was one of them. There were others out there. I think Bcash was another one. The failing of all of these things was how could you stop it being duplicated? It's like an electronic photograph, or an NFT. You've got what? Well, not maybe not an NFT. You have a photograph, and I say mine's the original, but now I make a copy of it. Now there's two originals. Well, that's the
Yeah.
problem was the problem, which was finally solved through the blockchain
Yeah.
solution.
Yeah. Uh, Hizia 18. Poland has now 509 tons of gold, which is 3 tons more than the ECB. Yeah, no, I saw the story this past week. And not just this past week, but over the last year or two, Poland has been accumulating a lot of gold, and it's great to see that. At least one European country's got some sense, Clive.
Yeah, I mean, Poland's been one of the biggest buyers of gold over the last couple of years. They've got their brain in gear. They've realized that uh, you need to diversify away from just holding U.S. treasuries, and that's what they've been doing.
Or euros as well, isn't it? And I
Yep.
think I think they realize that it's a neutral asset as well because with all the sanctions we've seen in the last 10, 15 years, freezing of Russian reserves, I
Well,
think they
gold won't default on them, and if the country which issued the dollars, the pounds, the euros, the yen, whatever, suddenly decides that there's some new rule applies to our currency held by foreigners, they can't do anything about the gold held by foreigners.
No, that's right. Poland is also one of the only countries in the EU that's not overrun with Muslims. All right. I don't think they also have the euro. They still use their own zloty currency.
Zloty, yes.
Um, the
And
Pharaoh.
by the way, I think Poland's the one of the best performing stock markets this year.
All right. Okay. Have you got any Polish stocks?
No, but I did recommend one in my 2024 Beat the Benchmark portfolio, which did all right.
Okay. Uh, Really cold says this Federal Reserve doesn't like competition. No, I mean, no central bank likes competition because they're monopolies. That's what people don't seem to understand. Yeah, it's like creating a central bakery and making, it's going to put all the independent bakers out of business or it's going to control them at least. Yeah, they don't, and that's what I don't get, how people don't see that having central banks is completely anathema to free market, to freedom, to competition. But well, they're in control of everything for now. Gary Hardy, thank you for your super chat. Would you guys define Fidelity cash management account as a bank? Could it fail any more less than the traditional bank? I think I know your answers. I'll let you answer that first, Clive.
First of all, I've never heard of Fidelity Cash Management Account, but it's obviously not a bank account. It hasn't got the word bank in it. I think you're not going to get the sort of protection you get if they default.
No, and I would say the Fidelity cash management account, and I don't know much about, I mean, I've had investments with Fidelity, even though I'm in the UK. But I would say Fidelity probably banks with JP Morgan or a big Wall Street bank. So ultimately, the cash that you keep at Fidelity is probably at a big US bank.
But just to maybe a comment, we're not knowing how it works. If in fact what they're doing is sweeping your cash for your brokerage account and putting it into banks,
Yeah.
and therefore you have a bank account thanks to
Yeah.
their Fidelity Cash Management service, as opposed to you have an account with Fidelity, well, that's a different kettle of fish. Then you do have an account at a bank. So I just want
Yeah.
to point that out because I don't know exactly how it works.
I've got something, I mean, they're in the UK, so I've got something, I Googled it. It says the cash management account, the value is, let's see underneath if it's protected. Uh, I'm not sure, if they do have the 85,000 guarantee pounds, or in the US, I think it's 250,000. You'd really need to, oh, here we go, is my cash protected? Your cash held with Fidelity is protected by strict regulatory requirements. Further information. So it says strict regulatory requirements. It doesn't say it's protected by the CFSF, which is like the FDIC. So what I would do is I would check with Fidelity, but I would say it's probably not as protected as it would be with a regulated bank because Fidelity. Oh, Gary Hardy is saying it is FDIC insured. So there you go. He's
So
just,
that must be, as obviously Fidelity itself is not a bank, it must be that Fidelity is sweeping your balances into banks.
yeah,
So you actually have a bank account. and presumably the Fidelity have got some way of sweeping it out of the bank
Yeah.
account when you spend your money on
Or
buying
or
something.
Fidelity has an account with the big bank, and then you have a sub account with that account. That's how they
Yeah,
do it. Yeah.
it could well be that.
Yeah. Uh, MJB saying my company 401k doesn't have a money market fund. Anyone find that extremely unusual? Talking about 401k, Clive, and maybe even here in the UK, there's a lot of talk now that they want to open up private equity to small investors, and I think that's a really bad sign, and I wouldn't get involved in it because I think private equity, those investments are heavy. They're really illiquid, and they're heavy. I think a lot of people who put money in there, they're having problems getting their money out. Is that the way you see it, or do you follow that at all?
Yep. Not following the private equity story in the UK, but more specifically, the problem with private equity is you don't know if you could get your money out or when you could get your money out. It's not like a stock market investment or a deposit account where you ring up the whoever you put the money with and say, "Can I have it back?" Um, you have to wait for an exit, which is at the that's determined by the private equity managers, and sometimes those exits might come 20 years in the future. So you could have a very, very long wait. And just to sort of make a small point of this, I did in my earlier years when I was a much younger man invest in some private equity products. And sad to say, I can't. I mean, I've got most of my money back and the profits, but sad to say, I'm still stuck with this legacy holding, which is worth next to nothing, but you can't get rid of it. It sits around as an annoying thing that you can't sell, you
Yeah.
can't give it away. The banks don't want to take it off you even for nothing because they don't know what it is. So I don't advise it. I think it's a pretty bad thing if you invest directly in private equity. What you can do, which is a much safer bet, a much more liquid bet anyway, is to invest in the private equity investment companies which have a quotation to the stock market and they're traded second by second as the stock market's open. And then you can, at any moment in time, choose
Yeah.
to sell your investment through the stock market. Whether you like the price or not, that's another story. But at least you have an exit route at your choosing, not at the decision of the private equity manager who might make you wait 20 years for it.
Yeah, his is saying is American capital fleeing U.S. stocks and parking in EU stocks and bonds. Could this mean that the Americans will fund the militarization efforts of the EU? Yeah, definitely. I'm not saying it's a good thing, but I think Germany announced a few months ago they're going to increase deficit spending massively to increase military spending. And I think one of the big German, like, milit I mean, big German company that's involved in that, I forgot the name of it, has done really well. Yeah, and I think one of the reasons for that is because Trump is saying, we've had enough helping you guys defend yourselves. Now you do it. So it could backfire a little bit for him because Americans are actually putting money into Europe. And Clive, if you remember well, up in the tail end of last year, there's all this talk of American exceptionalism, how the US stock market was doing really, really well and not Europe. And now it seems to have reversed. It kind of reminds me of 1989 and when, Japan couldn't do anything wrong.
Yeah, I mean, the European stock markets have been massively outperforming the US stock markets this year. When I say massively, I think we're up 8 or 10% in Europe, and US stock markets currently are slightly down. There's a 10% difference. And of course, US stock markets are down even more if you take into account the loss in value of the dollar since the
Mm.
beginning of the year. So European stock markets are outperforming USA stock markets at the moment. And just on this, are the Americans funding European defense? Well, let's put it this way: the two best performers in my 2025 Beat the Benchmark portfolio, which I published on LinkedIn at the start of the year, are Rheinmetall and Thales, which are a German defense
Yeah,
company. That's probably the one you're thinking of, and
yeah,
Thales, which is, I
Rheinmetall.
think, is a French defense company. Their prices are up massively, thanks to the decision by European governments to spend a lot more on domestic defense than on US defense, i.e., when they're going to basically buy or manufacture more of their and tanks and whatever they make as defense weapons in Europe rather than buying American-made weapons.
Oh, there's Rheinmetall, or metal. It was trading
It
at
must be up more than I'm guessing it's up 170% this year. Oh,
well,
there we are.
was up. It was at
Uh,
500 euros end of last year, and is
yeah,
now.
click on the year to date, Mario. If you go to the year to date, what's it's up? I say 195% year to date. So there you are.
Do you think Ursula von der Leyen and other bureaucrats were buying that before the Germans announced it, or the German politicians? I think so. I'm sure there's a Nancy Pelosi in Europe.
You can bet your bottom dollar someone knew the announcement was coming before it came.
Yeah, yeah. The Nancy Pelosi tracker. Have you heard of that, Clive?
Yes, I mean I have indeed. It hasn't done as well as Nancy Pelosi apparently, because it's got a lag. Obviously, that she doesn't announce changes until well after the event. There was another one. You probably heard of Jim Cramer, who appears on CNBC. There used to be two tracker funds. One was the what was it called? Jim L, which was Jim Cramer long, and I think it was a Jim S, which was Jim Cramer short. Of course, both of those are now closed, by the way,
Yeah.
because there wasn't enough interest, and they both turned out to be underperformers.
Yeah.
But the Jim Cramer short fund was doing better than the long fund.
Ryan Morosi, thank you for your super chat. Did you hear Besant mention stablecoins could create a 2 billion demand? Actually, it's 2 trillion. But anyway, for US Treasuries, I did. As a bond broker, when and what would you do to refinance the US debt? Also, if gold is revalued, who revalues it? Uh, the one with the most gold. So what do I think about Besant talking about demand for treasury? Well, Clive talked about that earlier. Yeah, it will provide, with the stable coins, there will be demand for treasury, but I don't think it's a panacea for fixing the dollar system. And this is what I said here because I saw this. I think it was yesterday or today that I retweeted it and made a comment. I said, this reminds me of revolutionary France when the assignats, like fiat dollar of the day, failed. They tried issuing mandat territoriaux, and that did not even get off the ground. And once Napoleon became first consul, he reinstated gold. Stablecoins are a scam as they're created out of thin air too. So yeah, basically what Besant is saying that they're going to use a Ponzi to keep another Ponzi going. So stablecoin is a Ponzi and the dollar is a Ponzi. So it will all end in tears, in my opinion. And how do you refinance the debt? Being as I worked as a bond broker, well, the if you want to keep the debt market going, unfortunately, you got to borrow less. The US Treasury is borrowing and spending too much. That's why they're having problems. But now it's so late, Ryan, because they borrowed so much that whenever they issue debt, they issue it with a coupon, but there's never enough debt or currency out there to pay the coupon, so they have to keep issuing to pay. Isn't that to pay the debt, right, Clive?
I mean that's the problem. It's borrow from Peter to pay Paul. So in answer to your question, Ryan, the only way the government can refinance the debt is to borrow from Peter and to pay Paul. And if Peter won't lend the money, then they have to borrow from the Federal Reserve, which means the Federal Reserve has to print the money
Yeah.
that they borrow. So yeah, that's how you refinance the debt. You basically get the central bank to print a ton of money and buy treasuries. End of story.
Yeah, unfortunately, there'll come a point where people lose total faith and confidence in the system because they realize that the money will never, the debt will never be paid, and yeah, that's when it all implodes. Right now, it's still going, But I think, Clive, as we end here, I think we're closer and closer to the unraveling. And when that happens, it doesn't really matter what the price of gold is because you won't be able to get any.
Well, I had an argument with someone the other day. I said, the US debt, I said, we're at 5 minutes to midnight. He said, Clive, that's rubbish. What are you talking about? I said, "Oh, I said, let me explain to you. We're serious at 5 minutes midnight. He said, no, Clive, that's rubbish. We're at 1 minute to midnight.
Oh, okay. There you go. Great, Clive. Well, it's gone past 9 o'clock here, and I want to wish everyone a great long weekend here in the UK and the US. Everywhere else, have a great start to the week. And unfortunately, Clive, we're gonna have to wait probably till Monday night to see where the markets open. It's gonna be
Yep.
very quiet.
It'll be a pleasure not having to stay up to midnight, Mario.
That's right. That's right. Thank you again, Clive, and have a great week. And thanks, everyone. And I'll talk to you later.
Cheers. Thanks, Mario. Thanks, everybody.
That's right. Thank you again, Clive, and have a great week. And thanks, everyone. And